Hey traders, Raghee here, and in this video I'm going to go over something a little bit different that we do in the room, but I'm not sure that a lot of futures traders might know this is something they can look at as an alternative. And that is, how do you look at the futures markets to set up ETF and stock trades? Now this is something that I do quite often. This is not a one-off. This is really sort of at the center of how I do day trade and trade stocks and stock options and ETFs and ETF options. But mostly it's using, say, I'm going to walk you through an example in the YM from today's session, where I have an alert, I have a setup where I want to be a buyer of the YM. Now, this was something that a lot of members sort of pointed out to me, and they said, Rog, we like the futures markets, but we'd also like to be able to play options either on the futures or the ETFs. And the first thing a lot of traders who are looking at futures options find out is they're not always very kind in terms of flexibility to expiration, nor are they very kind in cost. In fact, right now, if you were looking at a call option on the NQ, this would be the September contract, depending upon the momentum and how close to the money you are, the option premium rivals the initial margin requirement. Okay, so for a lot of traders, they immediately become a very expensive choice. So in the interest of affordability, which also opens up the idea of scaling in, meaning entering with multiple contracts, whether that be futures or options, the options become a very good choice. So here's something we did today. Taking a look at the Dow, reaching down into a range that I set up as a buy, we looked at a number of tools that at this point many of you are probably really familiar with, and that is things like the volume profile level, the V-score level, and even the HPMRs. And we looked for the market basically to retrace its steps to a value area high resistance or the clearing range high, which you can see we tagged right here. Now, as the day progressed, a lot of traders thought, well, Rog, if I want to buy it again, could I do that? I mean, the market got pretty volatile. We started to test some of these lower 9:30 to 10 o'clock V-score levels right around 2.5, negative 2.5. And traders started to say, well, Rog, can we buy the 26,600 level? This is where I'll say, do so with options. This is where I'll say, use those range extreme lows, but do so with options. So first of all, we had our day trading set up, and this was about a 70-cent trade. Now remember, this was a trade that we took and we held for, I believe at that point, less than an hour, and it yielded 70 cents per option, which is pretty great when you consider that a Dow at that point 269 DIA ETF call ran around $4.40, $4.45. And then you could look for about a 70 to 75 cent profit target. That's a day trade on a pretty reasonably priced option. As the day progressed, we started testing that V-score level all over again. Rather than go into the YM, once again, traders can look at the DIA. And the path of least resistance, gang, continues to be to the upside. I mean, the markets, when you step back and look at today, where it might have felt like a big-time sell-off, please keep in mind, that's today's candle. Yes, we sold off from the highs just above 27,000 on the YM, but we are still above yesterday's close, and we are still above today's open. It was just an intraday weakness story, but it was an overall gap up. Okay, so speaking of gaps, one of the things that we like to do is branch out our futures trades into related sectors and ETFs. And that included long positions we had as futures traders, right? Long positions related to underlying futures markets, mostly the NASDAQ. But we had long positions in Apple, Facebook, XLY, and XLC. All right. So in the premium video, I'm going to go over a little bit more of those trades where we can take a day trade in those markets and allow them to morph into something even a little bit longer term to take advantage of this path of least resistance. So we'll cover that in the free video. Now, heads up, gang, because we're on our countdown to options expiration, volatility will increase. If we're going to see a pullback, it won't surprise me that towards the end of this week, we'll see it. That means going into next week, I would love to see weakness into Friday, volatility and weakness, which would allow us to get long into July. I'm still pretty bullish this market, gang. No reason not to be. We still have bullish structure. And at the end of the day, we want to use that bullish structure to continue to buy the dips on the daily time frame. More on that in upcoming videos. In the meanwhile, thanks as always for checking these videos out. Thanks for your comments. I love the questions. Keep them coming. And I'll see you next time.